Yes, yes, Mr. Kumar. We can go ahead.
Uh,
Yeah.
okay, right. Thank you. Right. So again, going back to your pre-scene, you
Yeah.
remember this company AEN was founded by four founders,
Yeah.
but now they seem to have more than four shareholders. So I just want to remind you, last time we did a question on this area, but I just want to remind you one or two things. There are three forms of companies we can have in the world. One we call a public listed company. Right? Public listed company that you and I know, they are the company that is listed in the stock exchange, and generally according to the UK convention, the name will carry behind the name AEN PLC. That's what we call a public listed company. Then there are two other forms of company. One is what we call a public company, not listed. Third one is a company what we call private company. Now, we are sure in this case, this is not a public listed company. Why? Because they are not given any share prices. So with all that information what we have, very unlikely that this company is a public listed company. But it can be either a public company which is not yet listed or a private company. Now, what's the difference between a public company and a private company? Hmm. So I want you to understand that one, because remember, we are doing lot of mocks, and you might get carried away before the exam that this company is dead. But the information in AEN does not tell us anything so far about legal status of the company. So, in the present context, we can be almost be sure it's not yet a listed company or a quoted company, but it can be a public company or it can be a private company. UK, normally the private companies will carry AE in private. Again, we must remember we are not in UK. We are in a country called Breezeland. So there we do not know what the company law says all that. So we can't be anywhere sure whether this is a public company which is unlisted, not yet listed, or whether it's a private company. Now, can anyone tell me what is the difference between a public company and a private company? The primary difference, or whatever the difference you can think of. Yes? Any idea that you all have?
Yeah, the private limited company is limited by shares and numbers. This is very closely held between family members or friends in a very closed circle, and
Mm-hmm.
who should have a limited number of directors not exceeding seven. Uh,
Mm-hmm.
so that is defined as a private company.
Correct. Yeah, actually, the number of directors also can be defined in whatever the way according to the company's law in that particular country. But the number of shareholders in most of the countries, it is restricted to 50 for a private company. And the difference is in a private company, shares cannot be transferred between one and another. Say if I'm leaving, I can't just transfer shares to Mahalingam without the concurrence of the board of directors and the shareholders, maybe if the articles of association says so. So share transfers are restricted. Whereas in a public company unlisted, if I'm a shareholder, I can transfer my shares to Mahalingam without any permission from the board of directors. That's the big difference. Share transfers unrestricted. So remember yesterday or a couple of days back when we met and when we discussed this question, we went on that assumption on the mock that it is a private company. And I still believe it's a private company because you remember they had only four shareholders. Now they have a significant amount of shareholder, still they hold the significant holding and looks like it's a private company. But I want you all to be careful. Examiner on the examiner day might say this is a public company. But if he says a public company, don't get me wrong, don't think that it is a public listed company, right? A public listing means you have to go to the stock exchange regulations and get your listing, but that has not yet happened. So this still can be a private company. Most likely it's a private company, but it could be even a public company, not yet listed. If it is so, the share transfer of that person who was leaving our company, I think Isabella was trying to leave. In that case, there is no problem. She can go and sell it to anybody, wherever. Only thing, she has to find a buyer. She has to get the right price. She can sell it to anybody. But so long as that is a public company. But if it's a private company, she can't do that one. Maybe the articles of association will tell the method. In that case, she will have to come before the board of directors, say, I want to sell my shares, and the board of directors will have to approve the sale according to their way of doing the thing. So that, remember, because when you do more mocks, sometimes you might get your mind settled to say, thinking this is one kind of a thing, which may not be so. So I just want you to back up on that area. So that's something which I realized in this case study when I was reading this case study this morning. And the other thing I still work on, that my cash balance is 4.2 million. We remember, I think in your class I discussed, Mahalingam, why we should have cash. Why we should have cash in a balance sheet. Because cash itself is a totally a useless asset. Your monies are always invested on non-current assets. And current assets. Only non-current assets are the thing that is going to bring you earning capacity, to bring you generation of revenue. But what is invested in current assets? Inventory, trade receivables, and cash.
Bank.
In fact, if you look at all three, they are not bringing you any earning capacity. But without inventory, we know it's difficult to do business because you will be out of business. But in this company, I don't think they have any inventory because they are a consultancy company. They maybe have a little inventory like stationery. I'm sure they are written off to the P&L. They don't have any inventory. Trade receivables, they do have. Trade receivables is not going to increase your earnings, but if you, in the industry, if you don't give credit, you can't do the business. So you have to give credit, but that's not going to generate any additional revenue for you. Cash, on the other hand, is one of the useless assets. Even though we all work for cash, is one of the useless assets so long as it is cash in bank or cash in at home. It will become useful only if you really invest that money. But we know we can't invest all the money because we need to keep some cash for some purposes. Can you remember those purposes? Because there may be a question asking that, some person might ask you, there's 3.59 million cash last year, 4.2 million cash. Why do you want to keep so much of cash? Why do we need to keep cash? Any ideas? I want you to go back to your F1. Little bit early theories. Yes. I will give you one. Then you have to give me the balance too. Yes, working capital. Yes, that's correct. But there are particularly 3 reasons why we keep cash. Number 1, if you remember, transactions motive. Right? Because we have to pay certain transactions by money. We have to pay wages. We have to pay traveling. We have to look after our whatever. We need money for that. We can't show our property, plant, and equipment to our employees and say, look here, we have all this, you work. We have to pay money, and for that purpose, we need to have reasonable amount of money. Any other 2 guesses?
No.
No. Yeah, because you must go back.
I mean,
Yes.
there is a provision of contingency in case if some client
Yeah.
backfires or puts a case
Yeah.
on these guys, so they need to have.
Yeah, there's a name for that one. I'll come to that one. First one is the transactions motive. We need to have some balance to do the transaction. Second one, we call it precautionary motive. I'm going back a little bit basic, little bit on your certified, but you remember you will need this in answering the questions. Precautionary motive. That is for an emergency. You know, all of us keep some money at home. Maybe one of our children will get sick. Maybe something will happen. We need money, and that is what we call precautionary motive. So the companies also will have certain amount of money kept for precautionary motive. The third reason why we keep is what we call speculative motive. Speculative. I'm sure all of you all would have learned this or read somewhere, but long time back, sometimes you can forget all these things, but remember these are the things. Always, I want you all to keep I think in your screen also you can see this message. The recording is recorded because yesterday, whatever the reason, I recorded, but it had not got recorded. Just look at this one all the time just to see whether it is getting recorded. Right at the moment, yes, it is getting recorded. Okay. Yeah. So I want you all to know that there can be a question on this area why we should keep cash. And if not, can we reinvest this cash? Yes, we can. We must prepare a cash forecast for a short period. And if there is excess cash, we can negotiate and discuss and invest on short-term funding, right? So on short-term deposits where we can earn some interest, but whenever we are investing, we must look at the rate of interest what we can earn. We must look at the liquidity or the availability of the facility to convert it into money quickly, right? And also the safety. So as a corporate treasurer, you might think there is big money and you might want to think about that one. So that's another area which I want to look at. These are some of the things what you learned at F1, F2, but it will become very handy in your F3 financial strategy. Remember, F3 financial strategy is all about investment strategy, funding strategy, and dividend policy. So these are the three decisions that we decide always, and I want you all to think about that one. So you might have something coming up on that kind of a scenario. Why we need money? Whether the money we have excess. One of the directors might come and ask, "Why, Mahalinga? Why you want to have all this money? You have so much of money. Money is not going to earn any interest. Why we want to keep it?" So that kind of a case question can come up, and you should be able to answer that one. And then he might suggest, why don't we invest this in short term? What are the factors you must take up? Liquidity, the available return, and the safety. Because I may need money in another 3 months' time to pay for my software developer, and for that I need money. I can't wait without that money. But on the other hand, um, you know, um, you need money in 3 months' time. So you can't put it for a 6 months deposit, or you should not put it in a place where they might tell you, "Oh, I'm sorry, I can't give it to you. I have some problem, something, something." So you must invest in safe place. You must invest for the highest return, and you must invest a place where you can get money on time. And for that purpose, the tool what you will use is the cash forecast. You have to prepare a cash forecast and see exactly how much is surplus and for how long it will be surplus, and keep in money for these three motives: transactions, precautionary, speculative. Any excess money should be rightly invested. That's good financial strategy. That is good strategic decision for you and me. Okay. So what I want to look at is, last time we looked at, you remember Isabella trying to leave, and we discussed that first part. I'm sure y'all would have gone through the second and third part, but I just want to share some of my thoughts on the second and third part before I move probably into the third mark today. So here the second part. So you remember the first part, what was the story? Isabella is leaving, and Isabella says that she's leaving by end of September or something like that. And Peter is prepared to buy her holding. And Luke was a little bit concerned about it. Luke came to you and want to discuss this matter on a confidential basis. And that is something I think I can't remember whether I uh, discuss with you all. But here it says this is confidential information which he wants to share with you. So I can't remember exactly whether I discussed this with you, but I want to reshare my thought about it. Whenever you are writing the answer, you must write and tell him, yes, I will maintain the confidentiality in accordance with CIMA Code of Ethics. And that's going to carry you a lot of marks. Yesterday, one student was arguing with me, saying in these answers that they put it up on their answer, they don't mention any of those things. Don't get carried away by those answers. The examiner himself says they are not exhaustive answers. If you just answer like that the way they are given, you might not get enough marks. So again, I'm stressing on few things. Keep some models on your head. CIMA Code of Ethics, Mendelow's SWOT, pistol, Porter's, suitability, acceptability, feasibility, interest rate parity theory, purchasing power parity theory, Fisher formula. A few of those things, keep it up on your head, ends of matrix, and try to apply wherever it is possible. Here, I have extra 4 marks for the student who will say, yes, I will maintain confidentiality and I'm bound by CIMA Code of Ethics. Very simple statement, which can make a difference of 4 to 5 marks between a student who writes that one and who is not going to write that one. So that was the story last time. And now we move into the second part of the question. So Peter wanted to buy, and something happened, and now on Wednesday morning, so that was I think Monday, Wednesday morning, here Luke is walking into your office. Luke is your CEO, and he was very appreciative of your views and suggestions on the Isabel's impending resignation. Now, whatever the reply you're going to write, you must be thankful to him for appreciating your views. That is people's skills. You may not find that in the examiner's answer, but don't get carried away just with the examiner's answer. I can guarantee you the people who have written like that are far, far better off than the people who don't write that kind of thing. Just, look at very relaxed. When some person says, hey, Ja, I really appreciate what you have done, you will say, thank you very much. You're welcome. I will, that's a kind of a response you will do it. Write that response in the paper itself. He was in a very pensive mood. He said Joshua is not very keen with the idea of Peter buying the entirety of Isabel's holding. So Joshua is the other shareholder. We had 4, right? Peter wants to buy, Isabella wants to leave. Luke is the man CEO, and Joshua is the other man. He is not very happy with this idea of Peter buying the entire thing. You remember I told you, as far as I'm concerned, it's not a big concern or a big alarm of Peter buying, because still Peter will have 38%. So long as we are a private company, and I believe we are private, and in that case, the 62% will be with us. So I'm not unduly worried about Peter buying the Peter buying the 18%, but on a Peter buying the 20%. But Joshua is another key person, high interest, high power. We must respect his views. We must listen to his views. So Joshua, though interested in buying part of Isabel's holding, he is not in a position to do so, as already committed his daughter's wedding, which will happen in December. Luke also does not have any money immediately, as already bought a forest plantation last month. So, ideal situation would have been these two to buy the shares of the Isabella. But we can see it's not going to happen because both of them have some financial commitments. and therefore, they don't have money. What ways we can resolve this? So we discussed a little bit of this one last time. Luke says he has a one-to-one chat with Isabel, and he says, not he, she says she needs money immediately and cannot wait too long. Luke is concerned that they also will need substantial funds to settle the terminal benefits of Isabel. So these are something what we discussed without seeing the second part in the last part. But now we can see they're coming into exact to the point. And Joshua has suggested that Luke, that we will get Fiona to speak to the auditors and get shares valued at an exorbitant price so that Peter will give up the idea of buying shares and will make efforts of Isabel frustrated. What do you think of this suggestion? So this is what Joshua is thinking. Don't let Peter buy. Get Fiona to speak to the auditors. Make them deliberately increase the price so that Peter will give up the idea. And Isabel also will find it very tough to sell it so that, the matter will get dragged on. What do you think of this suggestion? We need to be mindful. We need to replace Isabel's position too in the board. And I want your thoughts on this matter too. So this is your second section. So again, let's think about the models, what we can use it, and let's think about the facts we can use it. So I'm going to quickly run through. If any of you all have any ideas, I would welcome you to give me any ideas that what you all have about this thing. What ways can we resolve this issue? What ways? So one simple way is not good enough. We must be able to tell couple of ways which we can resolve this issue. Yeah. So you need money immediately, right? Not you. Isabella needs money immediately. Peter is willing to buy, but Joshua is not very happy with that idea. So we have to respect Joshua's way was. What can we do in this situation?
Okay, I propose this answer in this way.
Mm-hmm.
Okay, so we need to have an agreement now, because basically Joshua is interested because of some financial crisis. He is not in a position to subscribe to the share, pay for the shares immediately.
Very good.
And again, Peter is also available, and then we must find out a few more persons, a few more directors, and then since Isabel is in need of money, that we should make arrangements to pay from the company, and we will just treat this as a share capital advance, and we can enter into an agreement with the rest of the 2 or 3 shareholders who are willing to buy the existing shareholders, and we can allow them some 6 months to 1 year of time. So within this period, the entire share capital has to be subscribed until such time an advance entry can be passed, and then treat this as a share capital advance. This is the proposition 1. And the proposition and the answer to this next question is, it is totally unethical to ask Fiona to approach the auditors, and then
we'll come to that one, Mahadevan, in a second. But
okay.
I want to look at your proposal, what you just now told, which sounds okay for a private company. You can always advance to the director some money. And in a public company, there are a lot of disclosures and all that. But in a private company, you can do. But we have a problem here, Malingam. We don't have so much of money. While I was talking about the money part of it, the balance sheet. The balance sheet, what we have it as that is also as at 31st March 2016.
Yeah. Only 4.2 million cash we have.
We have only 4.2 million. Look at their assets. Even forgetting the revaluation, all that, the minimum value, we even go by the book value, 86.7 million. 20% of that is how much?
Say 1.4.
80.67, 86.7. 20% of that one come to 17.3, isn't it?
Yeah.
Now, can you see? Well, what I'm trying to tell you. Our proposal, your proposal is excellent, but that is not going to work in this company.
There is no cash. Yeah.
We don't have money. Now that is what I call the business skills. So that is why they are good that we are looking like this. We will know with the 4 million because we need to keep some money for transaction motives, precautionary motives, and the speculative motives. And when we keep that money, we don't have money. Even forget about all the revaluations. But in my view, the figure that we have to pay will be at least about something like 100 million. Because if I go by the profit figure. Last year, the earnings was 116.3. If I multiply it by 5 times over to get a valuation, it's 580. 20% of that is 116 million. So my minimum figure to be paid to Isabella is about 116 million. My guess estimate. And in that kind of a situation, we don't have money. But otherwise, for a private company, there is no restriction. You can't give advance to buy shares. You can give a loan to the directors. Loan to the director. But a public company, if they do, they have to disclose it as related parties, all that. But you can give a loan to the directors and you can do it. So it may not work out on this area. Agreed?
Yeah, I understand.
Yeah. So now we have to think some other ways. What are the other ways? Last time we discussed this one. We can get our Fiona to go to the bank and arrange with the bank to give some financing facility for our directors, maybe under commitment, but some of the other people, like particularly the research department staff, to buy the shares of Fiona. Maybe we can because 100 million money can be arranged through the bank to many employees, maybe 20 employees, 30 employees, 40 employees, because they have some 90 odd employees, each one to be given a loan, so that the bank will give a loan to Kuma, bank will give a loan to Mahalingam, bank will give a loan to all of us, and the bank will get give that money to me individually. I will buy shares of that man, and always we can do that one. And with the dividends, what we are going to get later, we may be able to settle the bank. Right. So that's one way we can look at it. Right? That's one way we can look at. Then Mahalingam's proposal can be. Yeah. How can we say for sure there's an R&D department? Is this not mentioned in the organization structure? Why? There is a research department. There's a direct research, and they have a big research program that is going. Yeah, we can say Isabella. She serves as director of research. So surely there's a research department, but they may not have a very senior second in command, and that is why in the organization chart it is not appearing. It does not mean that there is no research department. We do have. And you remember there's a lot of money on research. Which university they are working, and they have a AE and research program. All that means there is research. Agree? Yeah. Right? Research was carried out by universities, but we fund it, we coordinate it. Yeah. But to remember, I think in the PC, there was something that is saying that even they do research. Some of our directors are doing research. Research is one of the big areas in this company. If I remember right. Non-technical excellence, qualified opportunities, engineering. Yeah. It takes excellent being wish to develop new skills. The company with subsidiary cost of studying, paying course for the two of the public relations, this, that, and the other. And for example, engineer has been given necessary something to conduct experiment testing and idea that he believes could reduce the cost of fabricating all that. And I think if I remember right, they were talking about the directors are keen to maintain a reputation of technical innovation. Several of engineers are working part-time towards PhDs, conducting academic research in collaboration with senior engineering professors at major universities. So you can see it's not only universities doing the research, our employees are also involved in research with these universities. Has a reputation being an early adopter of new technologies whenever they designing wind farms which might benefit from these. So you can see they are very much involved in the research, and there is a department. Maybe they don't have a big number two like in the other departments. Right. So, carrying on Mahalingam's argument, we may be able to get a loan from the bank to the company.
I put a check on this. You can borrow from the bank for your working capital requirements or for some capex requirement. But I don't know how far Fiona would be successful in organizing a loan for the purpose of settling a director, for the purpose of the share transfer.
Temporary facility may be possible.
Okay, you are
temporary facility, not for a long term, because you remember our Joshua is interested, our Luke is interested, till maybe till 1 year, till the next dividend is paid, we may be able to arrange the loan with the because our gearing is low, we should be able to fund it. But having told the bank that we are for this purpose, we can do it back, may willing to give it. Right? So, research was carried out by university. Yes, it's possible. Yes. Right? Thanks. Right. So, basically, that is one way we can look at. Then, think beyond that one. Yeah.
Just one. I have one question to understand. I'm just taking a step backwards here.
Okay.
Is it a liability of company to give really Isabel the shares? I mean, she's leaving, and it is not our liability to pay her money whenever she wants to leave.
It all
Either she
it all
either she arranges either she arranges her own investors and she says that, hey, I have an investor with me who is willing to buy the shares at this valuation, or if you don't accept this transaction, someone of you in the board buy my share. So if either that is a way, otherwise, I mean, why is company liable to pay Isabella whenever she comes and wakes up and says I'm leaving?
It all depends on the internal regulations of the company. When the company internal regulation says when a person is leaving the company, the shares must be sold back to the existing shareholders or to the nominees of the board of directors. The company is somewhat under obligation to carry out that legal part of it in the contract of in the articles of association. If it was a public company, that's what I told. If it was a public unlisted company, Fiona can go to the market and sell it. Not to market, but she can find anyone. She can find Mahalingam, she can find Nikhil and sell the shares. So long as she gets the price, no one can object it. But if the internal articles of association say it's a private company and therefore shares cannot be sold to the outsiders, then the board of directors have a responsibility cast on them to settle this lady with a reasonable time frame, within a reasonable time frame, maybe it's not 30th of September, but within a reasonable time frame, through a kind of an arrangement. So this is an unnecessary, in a way, it's a kind of a burden that the public, private company shareholders, the directors carry, because it is the internal regulations. Right? Sometimes even maybe that whoever lady Isabella is not wanting to sell the shares, but the article says you must sell the shares. I remember I was working in a company. I had a lot of shares. I want to leave that company, but I did not want to sell my shares because I was getting some 30%, 40% dividend. But that was not all right. Because the articles say the agreement which I signed when I bought the shares said whenever you are leaving, the shares must be offered back to the directors, and the directors must buy those shares. Yeah, are you clear on that point?
Yeah, board meet.
Yes, I'm clear.
board meeting has to be convened, and then the receipts and tables have to be recorded, and
Exactly.
the directors have to
Yeah.
confirm the sale and no purchase of the shares.
Exactly. And the company secretary will have to, remove the name of Isabella and put up the new names or whoever, that kind of a thing. So temporary facility may be arranged till such time as Joshua and Luke is prepared to buy. That can be arranged. Maybe even Joshua and Luke can get a temporary facility, probably with a company guarantee. That is also possible. Probably with a company guarantee. That is also possible. That's the duty. Now I want to go beyond that one. Right? If all these things is not happening, what's the next step? There are a lot of F3, F2, you would have looked at what we call private equity funding. Right? Private equity funding. You may have to lift up that whale of private company, make it a public company, not a very big difficult decision, not a very big process to make a private company public company, and you can invite private equity funders. There are a lot of venture.
That will take that takes significant time, and plus there is huge transaction cost involved with that. I mean, I
Yeah,
don't know
right.
if that is feasible.
That is feasible. That is feasible. Look at the venture capitalists. They can come and invest very fast. Venture capitalists come and they can do a due diligence. The company had been in existence for 16 years. Company is one of the largest consultancy firms. This company is known. Invite a venture capitalist, right? Make a board resolution, make it a public company. You can do that one. You can do it very fast. Within 1 month.
Yeah. Vendor due diligence have to be done by appointing some non-transaction advisory board, and
Yeah.
they will do the vendor due diligence, and then they will give you a data book. So based on this, that you can approach some consultants who are active in the private equity investments. So it's
Yeah.
possible. It's
Possible.
it's possible.
Possible.
Widely
Because
accepted.
I have arranged some funding for one of the big companies, private company in Sri Lanka, and it took only, Sri Lanka is not one of the most dynamic countries, but within 15-20 days, I managed to do it. Because the venture capitalist himself, this is an established company, they will like it, but you just have to negotiate your terms and agreements and all that, the exit mechanism, and you can do that one. Because you have to remember, we are 15 years, 16 years company. And it's time that we think of, one director is already leaving, a good message that the other directors also might leave. And if that is going to happen, I think we must be ready for that kind of a thing. So it may be time for you to think on that line. Maybe time even to think of public listing, but public listing is going to take time. But finding a private equity partner, finding a venture capitalist may not take too much of time. Answering the earlier question whether there is an obligation, we have a complication here. With the obligation, you have a complication here. What is the complication? PT is willing to buy. PT is willing to buy at a fair price. So in that scenario, we can't just, say, sorry, we don't have a buyer. PT is willing to buy. It is the other two directors don't want to give it to Peter. That's another internal matter. But what can Isabella do? Isabella wants to go. Isabella wants money. So if Peter is not willing to buy, when there's a ready buyer, and for you to object, Joshua to object, then either Joshua must find money and Luke must find money, or you must allow Peter to buy that one and settle our lady. Any other ways you can think of? Any other ways you can think of getting this matter resolved? Imagine you are Luke. You are Luke. Peter does not, Joshua does not like Peter taking the shares. Any other ways you can look at?
Can we offer bonus to the employees in the form of shares?
We can, but bonus is not going to bring any money.
No, let me explain you.
Mm-hmm.
Uh, Bonus will be to the employees, and the shares will be given in the form of bonus, and we will
Okay.
ask for the working capital uh, from the bank that we are going to pay in so and so period to these employees, and that money will ultimately go to the director,
That is
managing director.
mm,
This
what you
process
mean
was
is you mean
this
this,
pro-
you mean you issue the shares to the employees.
yes,
Then
and
what is the next step?
then we will not pay the bonus to the employee,
Okay.
or the part of the salary to the employee,
Hmm.
and we will get the working capital for the additional fund from the bank.
Additional.
Additional fund which is required
Yeah, bank
apart
might
from the
ask, why do you
salary.
want money? Show
Yes,
us a cash flow. Right?
yeah.
Bank is not going to just give you money. Bank will ask, show us a cash flow.
Yeah, in that cash flow, we will tell that we are going to pay this much salary, and out of this salary, we will not pay this salary. This will go to the bonus to the means anyway, either the bonus or we can tell the part of the salary to the employees, and ultimately we will purchase salary, shares will be for the employees.
Yeah, but how to get if you're going to pay salaries, that
Mhm.
means that you need money for salaries.
Salary will be not paid.
Hmm.
Salary money will be go to the director who is
Yeah, that is
leading the
of course in
company.
that case you are manipulating, isn't it?
Yes.
Yeah, that is not acceptable because we are supposed to be ethical,
Because
transparent in the transactions, even
uh,
with the bank.
this type of things happened at the time of when Tata Motors started business of light vehicles,
I
and
know.
it was very means a good thing that in a 1 year time there was a very good sale, while Tata Motor offered to all the employees the vehicle with means either it was a bonus or something, and there was a very good sale in the balances.
Yeah, but the problem is that transaction is somewhat creative,
Mm.
something artificial transaction.
Yeah, yeah, this is a bit artificial, yes.
Yeah. Now that kind of a transaction is not tolerated in the modern business society, particularly when you are a CIMA person.
Yes.
We have to look at the CIMA code of ethics. We need to be, I know, I mean, in practice, these things can happen in many ways. But unfortunately, when we are CIMA, when we are looking at trying to solve a problem, we can't get through that kind of a thing. Understand?
Uh, yeah,
Yeah, I agree with you.
Yeah, right. So now I think I have a couple of ways to resolve this issue. Finally, I can think of if I can suggest that time for our company to go for a public issue in this scenario. And before that, maybe we can go for a private placement. Hmm. Private placement. We look at some super people who have some money. We invite some of these people. Of course, we have to open up the company. We can't keep it private. We have to make it a public company, and we can issue shares to some institutional shareholders. I mean, not to issue, we can transfer the shares of these people, but for all that, the price need to be agreed, and that is another possibility that can be done. A private placement. Remember, there are three ways we can raise money on shares. One is what we call initial public offering. Second one, a private placement. Private placement is before you become public, you issue shares to certain top class people so that your shareholding portfolio looks super because they have got some super people in that share portfolio, and maybe in 6 months time you want to go public, and that's a good thing to go with that kind of big names because the public will know, oh, so and so is also holding, or Nikhil is also holding, or Mahalingam is also holding, and that can make your initial public offering share price high. Third way is once you go for issue, then after that you have to go for rights issues. So rights issue here is a possibility, but rights issue is not a possibility here. because the directors themselves say they don't have money. Rights issue is where you issue shares to them at a discounted price. But when the director don't have money, what can you do with it? So these are some of my suggestions that we will have to look at, right? What about that? Yes, Mahalingam, now I think you can talk about our idea of Joshua's suggestion about Fiona speaking to the auditors.
Yeah, before we move on to the second question, in the first question doesn't seem to have an no, weightage. No, what is the best answer which attracts the the examiner? See, the borrowing is a secondary option because the company doesn't have any money, and then offering the shares to our employees that who are engaged in the research, they may not also be so rich and be having cash to subscribe for the no shares, and then private equity placements are all again such another tedious job which involves no time. Whereas
put up the priority list. First priority will be to go to the bank and to arrange the loan for the employees.
Okay. Or while presenting this answer, should we emphasize this just because no one director is totally against Peter buying the shares because Peter has also joined in this company as in 2000 as a co-founder.
Yeah.
So all the four guys are all the key shareholders in this company.
Yeah.
So just because Joshua is objecting that Peter subscribing the shares, should we keep examining all those proposals, or how do we present it? Which answer should we have?
That's a good point. That's a good point. What you asked. All four are high power, high interest people. So we must look as the head of all those four must try to maintain the minimum unpleasantness. If we can have a chat with Joshua and tell him there is no danger, right? In my reply, I will say there is absolutely no danger of Peter taking this 18% or the 20% because still he will be only 38%. Between us, we have 62. Between two of us, we have another 40. Right, and maybe the other 22 is also for some of our employees, and therefore there is no big thing. If Luke can convince, that's perfectly all right.
Yeah,
I think I will go with you. That may be my number one.
Yeah, because Joshua is trying to apply the brake. She should have the cash and then she should keep buying it and then proceeding it. When she doesn't have any cash, and then he shouldn't be objecting Peter buying the buying the shares. It's an unnecessary diversion of the topic.
There's a good reason for him to object because one day, imagine now already with this Peter will go up to 38. Right? And if Peter can get another 10-12% from some other person, that will be the danger J for Luke, and that will be the danger J for Joshua. Understand? Today you are not in danger, but you are getting closer to danger. The moment if you can get another 10-12%, you are getting the control.
So is it a right proposition? Instead of approaching a banker, that do we approach a Peter? Peter, that we don't want to.
We can do that one. We can do that one for the moment because there is no undue concern at this moment. But we need to think at that point, at this point, we need to think we should not allow Peter to go above 50. And therefore, we need to work out new strategies now itself.
Okay.
Understand?
Yeah, what are the models we can apply for the first question, sir?
Mendoros, all will be the Mendoros. It's always a high power, high interest that will come up in a big way. Bank will come up high power, low interest people. Remember one thing, this company has so much of opportunity, low gearing, so they have a lot of opportunity here, and also they can probably think of going for listing, all that. The big form, the big model that we can apply will be the Mendolos here. And of course, this can be a kind of a weakness in the structure because we have only few directors, a few shareholders, and whenever a person is going to leave, we might have this problem all over again and again. Okay.
Okay.
Right. Now we'll go to the second part, which is a very, very famous part of the examiner's question. And yes, get in on that one now.
Yeah, see, Fiona, but this is totally unethical. No, Fiona cannot be approaching the auditor to value the shares at an exorbitant price and to frustrate no, Peter and Isabel. We shouldn't be appreciating this idea, right?
Yeah. Why? Very good. Why?
Because it is the lack of integrity and objectivity, because they are playing with both of these things.
Hmm. Yeah, that's correct. Lack of integrity, lack of objectivity, isn't it? Fiona herself is a qualified accountant and she is bound by CIMA Code of Ethics. I am bound by CIMA Code of Ethics, and we cannot, according to CIMA Code of Ethics, we must maintain integrity and we must maintain objectivity. In other words, we must be unbiased either towards Peter or Luke or Joshua or anyone. So to that extent, this is totally uh, unethical and also very unlikely that the auditors will ever agree for a thing like this, because auditors also will be subject to professional code of ethics. Correct? So this must be completely wiped off, and also for the long term. Now, always remember, whenever we start answering on strategic questions, think about the long term, right? Again, we can see a situation like this, uh, um, where a situation like this, where this Peter is trying to make it, whoever Joshua is trying to make, this can come up again and again at our meetings, right? Joshua suggesting something, so it's a good time for Luke to have a kind of a session on code of ethics. On code of ethics, get Fiona or an external consultant to talk about the code of ethics, and even maybe time for the company to have your own code of ethics. Are you in agreement?
Yeah.
Now, these are what I call long-term solution. Every time, remember, whenever we come out with a solution, don't think this is today's problem and you have solved. Because this man is going to come out every time with this idea. So we must stop it now itself. We must say, look here, this company is running on ethical standards. These are our ethics. And I think this will be a time, if we don't have a code of ethics, to put up our own code of ethics in lines with CIMA Code of Ethics, in line similar to CIMA Code of Ethics. That's the way you will answer a question like this. Any other question that you all have? Can you see? What I'm trying to get at you all is to see lot of things that you can get out of these questions. It's not, I don't think you will get this question in your paper. But what I want is, whenever a question comes up, think from different perceptions. Don't try to block your flow. This is why I say don't think even it is an exam. Think it is just another day in office, and in office you will allow the out of box thinking to flow. This is what your strategic examiner is looking all the time, not real textbook stuff. In fact, writing things like advantages and disadvantages is very boring, right? You must not talk about advantages and disadvantages. You must talk about the appropriateness and inappropriateness of whatever you're going to do. That kind of a thing is the thing that you should be looking at. Okay, that's all right. Right? Can I move into the section 3 quickly?
So how do we conclude the section 2, sir?
Yeah, section 2, you will make certain recommendations. Your first recommendation, I think I'll go with Mahalingam saying, to persuade our Luke to have a one-to-one chat and to persuade Joshua to accept this suggestion of Peter, because there is no undue fear so long as we are holding kind of shares. In any event, if Joshua cannot be convinced, for Fiona to approach the banks and to approach a facility for employees to get the loans and to buy the shares of Isabel, particularly giving preference to the research department staff. Because research department mother is leaving, the children will get somewhat often. We must care for the children in a big way. And as far as the second one is concerned, you will say it's totally unethical in with the CIMA thing. And in the long term, it's good for us to have our own code of ethics in line with CIMA and to have a forum discussion on ethical practices. So to prevent a recurrence of this kind of suggestion even flowing inside the company. Is it all right?
Okay.
And finally, you will probably say, if you need any further information, I'm always willing to support. Okay, let's quickly move on to the third section of this part. So here, Monday, Wednesday, Friday. So you can see how hot it is, right? It's Friday morning, and Joshua walks into your office. Right? Joshua is the man who is protesting the whole thing. He seems to be very angry with Isabel's decision. What is Isabel's decision? To leave. And naturally, he must be very angry because, Isabel is trying to leave and it is going to upset the entire structure. He says he is a venture capital company, all right, PVC, where his brother-in-law is the CEO, and he has indicated that they will be willing to purchase the stakeholders, Isabel's holding, on a valuation done by the auditors of PVC. The PVC will nominate 2 NEDs to the board of AEN, and it will be a condition that AEN will go public by 2021. So we are in 2016, which date PVC will exit. That's always the venture capitalists stand. They will come for a 5 to 6, 7 years period, and they will want to exit. There are 2 ways to exit. One is to make the company public and sell the shares, make a profit. Secondly, they can exit by getting the existing directors or the shareholders to buy their holding at a valuation to be agreed in 2021. Joshua is happy with this proposition and wants to know your views on this proposal. After a few minutes, Luke walks into your office and says in principle he is in agreement with Joshua's proposal to invite a venture capitalist, but Luke is not sure whether we should go along with PVC or do something different. These are challenging times for AN. Luke needs your support with your expert views. Fiona too seems to be worried with terminal payment, funding. She's thinking of a private placement. She wants to know advantage or disadvantage of private placement in this scenario. Yeah, that's all. So again, the very interesting development happening. 3 days, within 5 days, so much of things are happening. This is typical in a company that can happen. So you have to understand the challenging times for EA. One founder is leaving. One man wants to buy the shares. Other man is not willing for him buying shares. Luke is in a bit of a no man's land, and all these things must be affecting your business very severely. I'm sure none of them would have been interested in the business for last 1 week. Now that is also something which you probably want to write it and inform, because this issue has taken all the priority, and I'm sure no one is really looking at the business angle. So I want you to caution Luke, caution Joshua, and tell the board of directors, please see that this matter is sorted out, because our business will suffer and that can make things much worse for us. That also remember, when you get entangled in a matter like this, your focus is all the time, Joshua is going to PVC, Pete is going somewhere, something is happening, and the people are not doing the business. This can have a massive impact on the whole thing, and you can imagine what the employees stand is. Isabel has given the resignation, these fellows are meeting here and they are talking all these things. Right. Now, what are you going to talk about this one?
I mean, I think if the board agrees on the timelines of venture capital funding, it could be a good idea. And at the same time, the way I see it is that it is not really about the money that investor brings in. It is also about the value addition, strategic value addition, an investor can bring in.
Excellent.
Now, Isabella, who is a part of this industry, is moving out.
Yeah.
So if we bring in the venture capital who has specialized in investing in solar slash convert
Yeah.
renewable energy businesses, that could be very meaningful because they first of all know the business very well. They help on the strategic matters. They can make some good connections with other similar companies in that they have invested in the other geographies. And these venture capital, they also specialize in making a company IPOable. So
Okay.
they make the company IPO ready during the 4 5 years, and
Yeah.
they help them into listing the company on the stock exchange. So those are the definite advantages of private placement.
Yeah.
uh, in terms of disadvantages, is that, I mean, this is my personal experience. Private placement takes a lot of time. If you are not lucky,
Okay.
it might take even 1 year, more than 1 year. Then there is a fees
Yeah.
of an investment bank involved, which makes it costly.
Okay.
And then the private equity investors, they bring in a lot of controlling rights into the company. So not
Right.
only they will take the two NED seats, but they will also take a lot of rights in the terms of
Yeah.
voting on the daily on the main strategic operations.
Okay.
So they might try to control the company in their own ways, and they might not be able to view in with the management on
Okay.
all the things, all.
Yeah, I think there were some good points that are coming up, particularly when the venture capitalists come up, because your strategic interest is only limited for 5 years. They are not thinking long term, so they will try to look at from a different pair of eyes. Their interest is only 5 years. They are not interested in the 10-year, 15-year growth. They just want to see the best shot in the 5th year, and they want to get away. So that is one of the biggest problems with this private venture capitalists, because your line of thinking can be somewhat very much in conflict, because they don't want to go for big software development. They don't want to go for big long-term 7-year, 8-year projects. They just want 5 years, and their time frame is fixed for 5 years. So that can be a kind of a negative impact on a company like our company, which is doing a lot of research, which is looking things in a different way, in a long-term strategic point of view, and this can be a kind of a handicap on the company. Yeah, so that can be an issue that can always come up, right? Then the money you can get it, probably you can get it. I think it's a good thing that they are going to get 2 NEDs into the board. But remember, how many EDs are there in this board already? How many EDs are there in the board? We are Luke, we are Joshua, we have Isabel will be revealed, Peter, Fiona, Kamala, Seth. So 2 NEDs coming up may not be able to make a good impact on the board, because generally, if you remember the UK corporate governance code, now you can code that one as a model, as a technical model. Even though we are a Breesland company, the UK corporate governance model says the majority should be NEDs. But we being a private company, we be in a public company unlisted, the two board directors at the NED level may not be so effective against 5 6 EDs who are there already. So sometimes they may not be able to even contribute. I have had this experience. I was working in a venture capital company. I went into a particular board meeting. I was appointed as an NED, and when I went there, what I realized was, those fellows are talking all sorts of things. I could not understand half of the things what they were talking. They were talking plant A, plant B, plant C, this, that, and the other. Oh my gosh, I thought, I was totally a useless participant in that board meeting for 2 hours. Totally ineffective. Because unless you are properly inducted, you can't do that much of work in a environment like that when there are 6 or 7 people who knows about that is why the UK corporate governance says the majority should be NED. That way they keep that balance. So here it's not a balanced NED situation. So they may not be able to give too much of thing. But however, if the board is willing, they may be able to give something expert knowledge in their areas. And they may not be in the research area. They may not be in the compute area. They may be probably on the financing area. They may be able to give some advice.
I have something to add.
Okay, sure.
Yeah, the venture capitalist, the brother-in-law is actually a related party of Joshua.
Yeah.
So in effect, what he's trying to prevent Peter to do, he himself is doing by like allocating 38% direct and indirect stake.
Exactly.
So and I think the NEDs are just for show. They will actually do Joshua and the venture capitalist bidding. So they won't contribute anything to AEN. They would just try and do one-sided decisions, which would help Joshua.
Yeah, right. That is exactly that question is that. I think it's brilliant thinking on your part. I think that is where the catch is. It's not about the PVC coming. It is all about, it is the firm of the brother-in-law. Brother-in-law is the CEO. Brother-in-law is the key strategic decision maker. And you're going to put 2 nominees and the brother-in-law and Joshua will have a good game. He's trying to effectively prevent Peter and bring in, and Luke seems to be, happy with that one. So probably Luke, you can see, is somewhat either maybe and he's under a lot of pressure, or he is not, thinking like what you just now thought in this matter. So I think it is basically unethical to offer the venture capitalist thing to a company where your brother-in-law is the CEO. Already there's a conflict. In that situation, it's unethical. But on principle, the proposition of going for a venture capitalist, if no other options are available, is all right. Is all right. My wave still is Luke must talk to Joshua and try to convince him to get Peter into the act. And maybe if you want one more step ahead, maybe we can ask Peter to sell that 20%, what he's going to buy, maybe 2/3 of the 20%, he will sell it to Joshua and to Joshua and to Luke on a later day at a valuation to be agreed. What do you think about that suggestion? What do you think about that suggestion?
It's good, but then there would be any cash available right now, so it could be like
not today. Yeah. You ask Peter to buy today, but we can tell Peter, look here, all 3 of us are the founder directors. Now Isabella is gone, so you buy for the moment, but we will buy from you that 1/3 of that 20% later on another day, maybe after 2 years later at a valuation.
That's a good suggestion.
Isn't it? Now this is what I'm trying to tell that. I just got that idea into my head just now. I didn't prepare myself for this answer, but you can see, when you go to a problem, you can see the different ways the flow can come up. It's a good thing, right? We can settle all our problems. We get Isabella settled. We tell Isabella, okay, you can go home. That's all right. Peter, you have money for the moment, buy it. But come to an agreement with us in 2 years' time. Let's sign an agreement that in 2 years' time, we will buy 2/3 of those shares, what you bought of Isabella, at a valuation, not today's valuation, very unfair to ask today's valuation, at the valuation in 2 years' time, in 2018. That way, you can keep the company intact with the three founder directors, isn't it? Now you must think like that. I'm trying to get in. Don't try to think. Just get out of your mindset. Try to think many different ways, and that way you are definitely going to come out with better answer.
Only downside for this
Yeah.
argument is that
Mm-hmm.
if I would be a venture capitalist, I would have said that if that's the case, if management is, I mean, the positive side is management believes in the business and they are looking to buy back the shares when once they have the money in couple of years. But I
In
will definitely
that
take
case,
a
venture capitalists will not come into the scene.
right, and but in that case, as a venture capitalist, I will not give the right valuation today because I will say that I'm doing a favor to you. I'm buying the company now, and I will give back to you after 2 years. I will not accept the valuation which is given by the market rate or the market auditors. I will take a discount. I will give a discount on that, and then I will buy the share. So that could be a downside for the management on that.
Nikhil, we are not going for the venture capitalists in that case. We are telling our Peter, we are coming to an agreement with Peter. Understand?
Okay.
We are not going with the venture capital. You can't come to an agreement with venture capitalists on that kind of a thing. But we can come to an agreement with Peter saying that you buy the shares at the moment, but in 2 years' time, give us 2/3 of those shares. Two of us, Luke and Joshua, we will buy it at a valuation to be agreed by our auditors. We are not going public. We are not appointing any needs. We are not going with the venture capitalist funding. We are going with Peter's funding to settle Isabella. And in 2 years' time, the agreement is between Luke, Peter, and Joshua. If Peter is, unless Peter has some ulterior motives, I think he should agree with that. Isn't it?
But, but can't we do this with a VC fund? They will be super happy of the fact that they have a clear exit in 2 years. They will make money in 2 years.
Mm-hmm. Yeah, we can do with Peter. Venture capitalists normally don't come for about 2 year period. They will want a fair amount of period because the venture capitalists either the two exit mechanisms are the public listing or share valuation. In 2 years' time, you can't think of too much of a difference in the share valuation. Still, it's a private company. There is no marketability. The shares are not going. Venture capital generally makes money on the capital gains. So venture capital will always look for the public listing exit mechanism because there the shares will go up by price at least by about 20% because of the marketability of the shares. When the shares are the same company shares tomorrow, if it goes for listing, the price of the share will go up almost by 30% overnight because of the marketability. So if it is,
Yes, I agree with all those things. I mean, I'm quite on the same page. The only thing is, I mean, for the venture capital, the downside is so small because there is no real downside because 2/3 of the investment is protected by the management buyout, which these two guys are. So, I mean, if the downside is small and the exit period is within 2 years, I mean, it is still worth for them to look into because there is hardly any risk.
I'm agreement. I'm in agreement. That will be my second option because if Luke can talk to Peter and agree on that first one, that will make Peter less upset because if you go to a venture capitalist, which Peter has brought in, and of course I don't think we can go with Peter's venture capital company because they are the brother-in-law is there, so it's not a very good ethical one. I think we can take on principle and invite openly for other venture capitalist companies also to make their proposals. You should not go
Yeah, of course.
with one company. But I think the better proposition arising from that one, this one, will be to get our whoever Peter to agree to buy the shares. He has money. He's a rich fellow. Unless he has some ulterior motives, I don't see any reason why he should not agree in 2 years' time at a valuation we will buy back 2/3 of the shares. Okay. Yeah. So these are very challenging times. You can see that, it's a very challenging time for Luke. It's a very challenging time for Isabella, and also that kind of a thing. So my advice is not to go along with PVC, because in that case they must disclose the interest and all that kind of a thing. I think better to call for many venture capitalist companies and do a proper evaluation and decide which venture capital we need, if at all. What about the terminal payment issue and funding? What about the terminal payment? She's thinking of a private placement. I think someone told me private placement can take long time. Private placement is a very strategic way to raise funds, particularly if you are thinking of going later on public. Right? In 6 months' time, in 1 year's time, if you are thinking of going public, it's a good strategic way to raise money through a private placement, get some good names onto your shareholder portfolio, even maybe appoint in 1 or 2 directors, and then when you go public, say somewhere around about December, you can say so and so is our shareholder, so and so is our shareholder, and that will increase your share price. So private placement is a very good strategic move to do just before IPO, if you have any intention of an IPO. So if you don't have any intention of an IPO, a private placement will bring money, but I don't see any justification for going for a private placement in this company, because our gearing is very low, our performance is very good, we can raise money from a bank. And it can't be too much to make a terminal payment. So to go for a terminal payment to a private placement, it will be a very, very expensive process. Of course, out of all 3 methods, private placement is the cheapest way to raise money. Much more cheaper than IPO, much more cheaper than rights issue, but still for all, there will be some expenses to be incurred. And here we have a low gearing company. We can go to a bank. Our status looks very good, and we should be able to raise money. And if it is less than 1 million, or if it is in that range, we have enough cash in our cash coffers, because we have 4.2, and unless it has been spent already, we can work it out. So to do that one, the model will be to do a cash flow forecast. To do a cash flow forecast and see how much cash is available internally to pay the terminal payment of our Isabella. Yeah, look at
And
do a
can
cash
we
flow.
also put an argument in a way wherein we can put the profiles of the existing shareholders, saying that these guys were coming from a university and a research academic background. They have done very well on the operational front of a renewable energy business, but when it comes to financing and fundraising, there could be a huge value addition by a private placement company to take this company to the IPO in a very attractive, at a very attractive valuation, at a very faster pace.
Very good. I think that's a good thinking. That is provided our directors an agreement to go for a IPO later. That's what I said. If you are thinking of IPO, private placement is ideal. Private placement, because that is going to add lot of value to the company. But if you don't want to go for IPO, because we are not gone for 16 years, and if you don't have any intention of going for IPO, then private placement in a scenario like this looks totally inefficient. Yeah? Any other suggestions that you all have? So, I can use here the corporate governance model of UK. I can use here the Mendelos again, because Joshua is there. I can use the CIMA code of ethics, because the CEO of this company, it's objectivity is lost somewhere. I can use venture capital raising, all that kind of a thing. And yes, those are some of the models which I can use it here. Okay. So these are a few things which I want to pick up on that second mock what we did. And again, I say, start writing. Yesterday, I saw a management case study student. Uh, uh, he had beautiful ideas, but his typing speed is so slow, he can't write in the 40 minutes even a quarter page. So, till we start writing, we do not know exactly our skills. So I encourage every one of y'all, even the same answer, write it, write it, write it, till you get that speed and speed and speed, because in the exam you need all that. So don't think that.
One question on this
Mhm.
thing, Kumar.
Yeah,
Can I ask you, where are you based?
I'm based
Are
in,
you based in Dubai or?
no, I'm based in Sri Lanka.
Oh, okay. Now, I
Yeah.
just wanted to know if the examination center in Dubai do they give the keyboard, the traditional keyboard to type, or is it like the like modern laptops?
I think it's
Traditional keyboards.
a traditional keyboard that is given. Yeah, not the modern laptop.
That's a
So
problem.
yeah, that's a problem. So I think better we get used to the traditional keyboard, because sometimes we do all in the laptop, very soft fingers, and suddenly we might find in that place. So what I'm suggesting is, uh, meet your CIMA representative, whoever in Dubai, find out exactly, and try to do a little bit of a mock exam in one of those centers if possible. Try to find out what they provide, because I know some places they provide a whiteboard for you to get down your notes and whatever your plan. Some places they give some piece of papers for you to write down. So be aware of your examination conditions before the exam, and be ready. This is your last exam. Don't keep any loopholes to be cleared up. Exam you might succeed, you might not succeed. That's a different story. But let us do the best and give God the rest. I mean, that's how my theory is always. You can get through the exam, you cannot get through the exam. That's not the matter. But we must give our best try. So don't keep any loopholes. I think that whoever who asked that question was fantastic question. Is it a traditional keyboard or a laptop? Right? And there are some experienced students, maybe who were set for the exam earlier. Please share in a forum with your people, because there's a WhatsApp thing, share it. That way you will be blessed. And this is exam. It has a lot of, for me, it has a lot of a kind of a blessing. Timing is not mine, timing is God's, but sometimes, we must do our best. So that's why I say, read the present, do papers as much as possible, look at these questions, look at the pre-scene, try to think out of box all the time. You don't need too much of about the industry knowledge, but whatever it is relevant, try to work it out and try to put it up. Okay. I want to go for a quickly the next mock which I have done. Actually, all these mocks I have done, taking some of my own experiences in my working sector for last 40 years, and also taking a lot of your past papers, taking a lot from your pre-scene, looking at the examiner's mind. I have done most of mocks on my own, but this is not all. You can look at more. I'm also trying to work out more mocks next couple of days. So I want to look at the third mock which I have it for you all. So this is my third mock. I also has some mocks for you all. You can look at many mocks. Nothing lost looking many mocks. So here I have another 60-minute section. Who enters your office? So imagine CEO coming into your office. Surely something must be very important. I'm glad I caught you. I'm looking for some advice, but I do not wish to involve Fiona at this stage or any of the directors. So again, in a way, it's a confidence on you, which you can make happy. But on the other hand, uh, something that can create problems for you because you are working to the board true enough, but you are reporting to Fiona, but keeping something confidential from Fiona and doing maybe something. But let's look at what he's talking about. I was approached by Maurice, chairman of Solar Energy Networks, SCN, concerning the possibility of a merger between our two companies. Now I see a merger here somewhere. Now I want you all to probably you have a better idea than me. What is the difference between a merger and an acquisition? Merger and acquisition. Normally we call it a merger because it's a much more refined term. But what is a merger? What is an acquisition?
Yeah, in merger, two company will merge to form a new company in general, and acquisition wherein the first company will acquire the other company to retain the identity of the first company.
Yeah, right. First one, what is called a merger, the company A and company B will get together and they will both lose their own identities of A and B, and it will be called AB. Like we saw Standard Chartered Bank Greenlace merging sometime back, and it was called Standard Chartered Greenlace. Now I think they have taken the Greenlace off and it's Standard Chartered. Long time back, I remember Glaxo and Wellcome merging, and they call it Glaxo Wellcome. The other one, this is what we call a merger. The other one is one company A taking a controlling interest in B. Both the companies will exist separate entities, but this one will be acquiring maybe more than 50%, more than 100 or 100%, and he becomes a parent. This becomes a subsidiary, and parent will have to prepare consolidated financial statements also. So that's the difference between a merger and this thing. So the two companies will run separately. They will prepare separate financial statements, but parent, in addition to preparation of their own company statements, will prepare a consolidated statements in accordance with IFRS 10. And that's what we call acquisition. Here, it's basically a merger, a new company is formed. No more the old two companies will have any status. A new company has taken over the assets and liabilities of the old company. And in a situation like this, you might have a problem of the directors. Because here, you might find you can't accommodate all the directors of both the companies. So you might find certain directors, have to give up. Here again, maybe in the subsidiary company, along with the directors, these people might put one or two of the directors also into this board. They might remove some other people. So that's the difference between a merger and a acquisition. Most of the time we use the word merger because that's a more refined word. People don't like to say that we have been acquired. People like to say we have been merged, but you must know the difference. So basically, Maurice, chairman of Solar Energy, concerning the possibility of a merger between our two companies. Remember, we are the largest consulting company in Breezeland in alternate energy. I was a little bit surprised because of last month's alternate energy monthly. There was an article about a possible merger between Zen and Penn. I suspect they are keen to join with any large company that can offer some synergy. So in a merger, what we find is synergy. Synergy can come up in different forms, but in fact, the theory says if you don't have synergy, don't merge. And most of the mergers have failed because we thought that there is some synergy, and after merging, we find there is no synergy. You remember what is synergy? Any idea? Synergy?
I mean, it is basically there are quite a few different synergies. Synergies means
Yeah.
that 1 + 1 should be more than 2,
Exactly.
and there are different categories of it.
Yeah.
Financial, commercial, operational, strategic,
Yeah, right.
And taxation also. Tax synergies are also there.
Yeah. Basically, synergy is what two individual companies cannot get achieved individually, independently, they can achieve it together. So in other words, with synergy, what happens is value of A plus value of B should be more than the value of A plus value of B should be less than value of AB. AB. Combined valuation should be much, much more than the two individual companies. In other words, it is a place where the two companies, what they cannot do independently, they can do it together. So that's what we call the synergy, right? And most of the companies will merge for the reason of synergy, economies of scale, financial synergies coming up, resource synergies. So many synergies can come up in different ways by merging two companies together. Right. So here, they are looking, you can see the Morris is trying to join a company where they can get some synergy. I happen to know Sen has invested recently on software upgrades for alternative energy. Now that might be something interesting to you. You remember in our company, our software is almost dead now. First 3 months, we have written off almost all the software, and probably our software is outdated. Time for a renewal, time for replenishment, and this may be an opportunity for you for AEN. It is state of the art, but it has to operate at close full capacity in order to be economic with software project, and Sen has not been getting enough business to operate at its full capacity. Right? So they have got their software. Software is modern, state of art, but for them to get the best use of it, they must get maximum capacity utilization. So on its own, they can't. So they believe by joining a company like PEN or company like AEN, they will be able to get it. We had SCN to merge because we have substantial research projects going on. Yes, you remember we have spent a lot of money on research, and we are not too much involved on solar projects on commercial basis, but we have invested in the past heavily on research of solar, and Morris believes a merger between two companies will be a good opportunity to both companies to prosper. SCS is facing liquidity difficulties after heavy investment in software upgrades exceeding 50 million. Right? So that is something which you may be a little bit concerned when you merge with this company. That company may not have the enough financial support and strength. They may rely on your financial support and strength to go through. Morris proposes a full merger. Full merger means both the companies to merge together. This will be achieved by the creation of a new parent company, which will acquire existing equity in both companies through an exchange of shares. Morris and I will head a special nomination committee to select the most suitable board for the new company. Now you can see some of your fellows may get dropped out, some of their fellows may get dropped out, and then Morris will continue as chairman of the company, whilst I will be the CEO of the company. So in the new company, we are going to have a chairman and a CEO. Right at the moment, we don't have a chairman. Our Luke is the CEO. Needless to say, this is highly all confidential, naturally, because they are not discussed with the board members, they are not discussed with Fiona or anyone. Do you think that it sounds as if there are potential and achievable synergies between AE and SCN? Would you regard it as gross ethical behavior to keep this conversation just between two of us for the time being without warning Fiona until I have had a chance to negotiate further with Morris at SED? So that is the thing. Then you see that there was an article in July 2016 magazine. So we are in August 2016. It is rumored that Solar Energy Network has been in merger talks with PEN. So not with us. Right? 1 month back, they have been talking to some other company. If true, the merged company would be the largest alternative consulting company in Queensland. Right at the moment, we are the largest. if the merger has gone through, they would have become the largest. The merger would make straight strategic sense because Sen is dominant in solar consultancy business with a significant recent investment in software upgrades for alternative energy industry. Penn with its dominant marketing strongholds will be an ideal merger. There have been considerable in the sector about the proposed merger. There have been considerable discussions. There have been considerable interest in the sector about the proposed merger. So, whatever it may be, in July 2016, they have been talking to some other people. It has failed. And now the same man is coming and talking to our CEO. So now we have to look at a couple of things. Your mind must be now running itself. One, the why it failed. Because if they are done, it would have been somewhat a threat for us also. But on the other hand, we want to know why it failed. That is one thing that you probably want to look at. And there are some ethical issues here, and also some liquidity problem, and also about the merger itself. Yeah. So,
I mean, the first thing which comes to the mind is that they spent 50 million in software upgrades, which is not a software is not the main revenue generation businesses. And
correct.
in terms of synergies, we would like to have something like a marketing synergy, wherein they bring in new clients and they improve on the liquidity of the entire new merged entity. Here, the first impression is that there is an intellectual lack of intellectual decision making on where to invest and how much to invest,
Yeah.
and this wrong investment has brought some liquidity problems. So that is the first view of the management, and I would
Okay.
like to ask about that, or as a red flag.
Okay. Good. Yeah. You remember, as far as we are concerned, I think our software is just coming to end of life. So we may be looking very soon for software. Right? Remember, in our case, we had software worth 18.9 million, and that was in 2016, 31st March. And by the first 3 months, we have written off 14.9. So our software now will appear at the end of June at 4 million. So I think we are in a time for software upgrade. So in a way, you might find a merger with a company like this, we might be walking into the software straight away without making an investment, right? But having said that one, as you rightly said, we have to look at the compatibility of that software with our operation, whether it is the compatibility, because just because some person has invested 50 million, it does not mean that it will fit into our shoes. That may be something which we want to look at all the time. And also, probably as you rightly said, they look a little bit unwise after investment if they are gone into a liquidity crisis. That is also something that you may want to look at, right? Yeah. Now,
And the point, sorry,
sure.
and yeah, and the point which is also important here is that sometimes merger not happens for the synergies, but sometimes it happens so that another merger with the same company doesn't happen. And like in this case, if that merger with PAN and SEN would have happened, they would have become a number one company. So because it is now down, that
Yeah.
situation is not there anymore. I mean, we don't have a risk to acquire or merge with SEN to avoid the largest market player dominance.
You are right.
So we will
Because
still have,
basically, you want to find out from your company's point of view, why should I merge, isn't it? Only reason what I can see, yes, if they have merged, I would have been under some other threat. But since that has not happened, I'm not under immediate threat. Still, I'm the leader, right? So I don't have a big threat at the moment. And my software upgraded, I don't need to go for a merger and sacrifice all my rights and everything. I drop some of my directors and all that kind of a thing. So there is no particular reason why I should be going, because if I want software upgrade, I can find money. And I'm doing already research in the solar, right? So I'm the largest consultancy firm. I have enough of things happening in my own way. So probably there is not too much of a thing that can happen from a merger between two companies. And a merger, as you rightly said, it must be bringing synergy, and in that case, the shareholder wealth should increase. Correct? So, if there's going to be any benefit of this merger, we should be only thinking of the software upgrade. But that again, we have few problems: the compatibility, and whether it's a good reason for a merger, because we can fund it. Our gearing is very low. We can fund it and we can do it. There is no particular reason we need to merge with another company. We are the largest, and also probably I want to know why that other merger failed, isn't it? Of course, there will be some pluses also. I mean, I must not be very negative all the time. I must be looking at the pluses, because we can creep into we get an opening into the solar energy market, which we are trying to get at, right? Which we have been trying to get at, but for 16 years we have not been very successful. Although we have done research, our income is coming from wind power. So it's an opportunity for us to get into that market, because the Sen will have a lot of expertise in that area. Solar energy. That may be a kind of a positive thing. Yeah.
I mean, I agree with the point that there is a potential and chance to enter into solar market,
Yeah.
which we don't. And inorganic growth could be a very good way out, because they get access to the entire management team. However, to enter into solar and any other markets, they can also acquire some startup or newly formed companies which have like 2 or 3 years of experience, and they can buy that company very cheaply, rather than merging and leaving your own identity as an AEN, which was built over 16 years for a company which doesn't look very compatible, which is SEN.
Excellent. I think that's a fantastic idea that came up, because I don't want to lose my company identity. If I want to get in, I have enough and ways of doing two acquisitions, isn't it? Yeah, right. 16-year-old company. We have done a lot of hard work, and that I may not want to do that kind of a thing. So also, yeah, I think that's a good thing. Any other ideas that are coming up? I think I'm very happy with the input that I'm getting. Yes. Any other ideas? You can.
On the other hand, we can promote our own company for the solar energy instead of acquiring any other company.
You can. We can use the Ansoff matrix, right? With our own research already done, we can do it, Prabir.
We can hire some of the experienced staff in this field in order to penetrate in the market.
Yeah, right. So you don't see a very special reason for a merger to lose your identity and all that. So because they're asking us finally, what are they asking us? Needless to say, all this is highly confidential. Do you think it sounds as a potential achievable? So having discussed all these things, I think I will come to a conclusion.
Since the discussion with other companies for SAN was not negotiated, we are a bit suspicious that there is something could be the reason why this company is coming to us.
Yeah,
right. We should analyze the facts in the light of some more information provided by Luke.
Yeah.
Before going for the merger, we should analyze the position of the share value of both the companies. Before making it public that we are going to merger, we should agree that the share value before the publication of this news should be recognized by both the companies for the merger.
Yeah. And now you are basically advising the board, no? Right? Board can either take your advice or board can reject your advice. It's a different story, right? But if you are advising the board, looking at all the facts, what we decided, what we discussed, if I was you, I will advise not to proceed with the merger.
Yes.
Right?
Kumar, one question here, and this is very important for me to
Okay.
understand.
Mm-hmm.
In situations like this, many companies just sniff around the market and to understand who are the companies willing to sell themselves or get
Yeah.
merged with. Just to be more active and close to such companies, because if
Mm-hmm.
another there is pan, there is this, there could be XE and something other thing. I
Yeah.
want to be closely associated with these companies and just give a small letter of intent that hey, I might be interested. I'm not. I would like to do some due diligence. The process could be slow,
Mm-hmm.
but I would like to somewhere in keep be in touch with these companies just to make sure that if they got a very strategic fit partner and
Mm-hmm.
they have a chance to become number one, I would be also in a ongoing communication with them that hey, I have made my mind and I want to acquire you or merge you now.
Mm-hmm.
So I would not say outrightly no, but of course I will not acquire them unless and until
Yeah.
there is some significant change of event. But I would like to be close with them, sniff around a bit.
I 100% agree with you. I basically that's what I was trying to tell. I will tell my board, in my view, we should not go ahead with the merger. But this is a good opportunity for us to come to know about these companies and therefore right opportunity for us to go for a due diligence and to see, because we can have a similar trade, because if that merger has gone through, we would have been under some other cloud. So to from a strategic point of view, what I would want is to do a further due diligence on this company, not with the view of really proceeding with the merger, but to get more information, which is not unethical, right? Which is not unethical. If it is really good thing, we will. But for initially, prima facie, my recommendation is there is no particular synergy we can get by merging. Agree?
I mean, it's definitely, and it's like getting the access to the entire database of a solar company for free.
Yeah, because it will be very difficult to get to the entire database, but you will get a lot of information. You might want to learn the experience of their failure, right, of the merger, why all that, so that you will be from somewhat armed, because later on you may be in a more strategic position, even to offer even to go for acquisition. Who knows, right? You may be able to acquire CCA. He's talking about a merger. What about if you decide to acquire? Yeah, that can happen, provided we can find money. We can issue shares and we can acquire. So just it's a window that is being opened. You don't want to just shut it down and close it. You may want to explore that window, but initially, prima facie, I don't think there is a good reason for a merger to happen, right? So that may be the first part of it. Then I want you to think very, very drastically about this ethical part of it.
Yeah,
Ethical part
Uh,
of it.
I I wanted to
Mhm.
ask,
Yeah, sure.
yeah.
um, in this, as per answer of matrix, do we classify it as a diversification because it might have different customers for SCN?
Mhm. Yeah. It will be not only a different customer base, it will be a different product also, because it's solar energy.
Yeah, correct.
So,
So
so,
that's why I mentioned
so, it,
diversification, new
yeah,
product,
it,
new
it will be
market.
it will be a new market, new product.
Okay, so it's not market development per se, right?
No,
Sorry, product
it's
development.
it's a new market, new product, because if we really want to go there. But whether that is the way to walk in or whether there's another way to walk in is something which we want to see. Okay.
Yeah.
Very
Okay.
good. I think I'm very happy that the way that you all are putting up, because I think this is the way that it's not just merely answering. This is the way that you share, interact, and this is the way that you will get lot of ideas flowing. So this is fantastic, right? So let's look at the ethical breach quickly. What are the
So,
things that you think?
okay, regarding ethical issues, we would
Hmm.
like to highlight that uh, being a being a junior staff, CEO has approached me
Hmm.
regarding though he can approach me because we are not bound to give reports only to my boss,
Yeah.
immediate boss.
Yeah.
We can report to the board of director also.
Yeah.
However, there is suspicion that there could be a down the table transaction between our CEO and the CEO CEO of the
Maurice.
company in question.
Yes.
In case of something find out in the later stage,
Hmm.
in that case, my position will be in trouble.
Yeah,
So
right.
we should highlight this all these situations before further proceeding.
Yeah. That is fantastic. I think that's good because you have to say at the outset there is no sort of a obligation for me to inform Fiona because I'm reporting to the board. I'm working for the board, so it's perfectly all right for me to do it. But having said that, one, the secretive discussions between Morris and our Luke without informing his co-founder directors later on may be interpreted that there has been some kind of an underhand transaction, right, between them. And in that case, if the people come to know that I have been getting initially involved with the whole thing, there may be some kind of a personal liability, and therefore you may have to consider that one. That is what you must tell Luke. You can't. You have to put it to Luke and say, this is the way that the people might see that one, and in that event, my name also can get, and according to the CIMA Code of Ethics, that may be a breach of my professional behavior. Yeah, yeah. So that can be something, and also the fact that earlier the merge has failed, and so maybe that there are some few problems, and therefore it may be in the best interest, to not to pursue this merger. And also the board should be properly briefed. Our board should be properly briefed, and I believe to create a kind of a transparency. There's an ethical responsibility on the part of Luke to brief the board at this stage before proceeding any more, because already the earlier one came up in papers. If this also comes up in papers, and if the directors of AEN comes to know through the papers, it's going to be a kind of a situation that can create a problem. Also, uh, you know, there may be certain people losing the jobs at the highest level, at the board level. As someone said, I'm a junior, right? At that higher level, there can be some people losing the jobs because these two people are going to form up a nomination committee and decide on the recruitment. So, or rather, the ideal board of directors of both the companies. In both the companies, there may be certain people losing the job, and there again, it can create a kind of a situation. Also, another factor we have to remember, we can keep it confidential. What about Morris? What about if he puts it in the, put it in the papers or whatever? Because Luke is not talking about Morris keeping it confidential. Luke is telling that, uh, for us to keep it confidential, for you to keep it confidential. But how about Morris coming out and, putting out something saying that we have discussed? So you must, as an advisor to Luke, as an advisor to the board, you must look at all danger angles for Luke. One thing, his name can get shattered, his name reputation, because he has done something secretly. And when the people come to know that I have been involved in that, that can create a kind of a bad relationship for me also in the company. Then other side is, you know, true enough, we will keep everything confidential. But what is the guarantee? Because last time when Morris discussed with some other people, it came up on papers. What is not there to prevent it coming from the papers next time? And what happens if that comes up? So you must think different ways all the time. And this is what these mocks are going to help you. As I said, you may not get a similar situation, but you will have some ideas picked up from this. Whenever we talk about confidentiality, remember confidentiality is two sides. You can keep it confidential, but if the other side leaks it, you are exposed. You will be completely exposed without realizing. They can even take a selfie and put it on the Facebook and say, hey, Luke and I met and we discussed it. Where can you hide your face? So you must be very, very concerned, conscious, and you being the advisor to Luke should be telling these things. And you should never encourage Luke to discuss things with you without discussing with his board. The board is the key strategic arm of a company. The board is there to direct and control the affairs according to the corporate governance. So therefore, the board must be taken into confidence. The board members must be taken into confidence, and any matter of strategic interest should be discussed at the board at the very initial outset before we discuss with, going with secretive discussions for long with another party. I would like to look at from that angle. My recommendation is not to proceed, but to exploit this opportunity. We may have even an opportunity of acquiring SEN, but surely not a merger. But for that purpose, to proceed with due diligence, and for that purpose, you must brief the board. Get the board views, find out also about why other merger failed, all that, but I strongly recommend not to proceed with a merger. Any ideas you have?
Yeah, I just would like to present my views like this.
Okay.
You see, there are two top executives. One is Mr. Morris, and then the other guy is Mr. Luke. So they are networking, and Mr. Morris has very informally approached, communicated to Mr. Luke that the merger proposal would be fine. So Luke has already heard that the merger proposal with the pen has got failed. So there is no written offer, there is no written communication from Morris that I am interested in this merger. So it is only an informal networking discussion. So at this juncture, Luke is just entering into my office, and then he is very informally asking me, what is your views? Without taking my views, he cannot discuss this matter in the board. Supposing that if one of the board member knows much more information about the failure of this merger between the Pen and Sen, and then Luke will be losing his face. So he will just trying to get a very first-hand information from me to analyze what is the background of this company, who is Morris, what is the financial strength of the Sen, and what is the financial strength of the Pen, why the merger has got failed, and there is no need to discuss with the Fiona at this moment. So probably Luke may be using me to take the first-hand information before he proceeding to discuss with Fiona or with this board. So after having discussed these ethical issues at length, I don't feel any big thing in having discussed this with me at this initial stage, because I don't see any written offers from Morris. This is only a very informal discussion.
I think the informal discussion, in my view, has gone a little bit further, because they have decided that they will get into a committee, and they have decided who is going to be the chairman, who is going to be the CEO. So it is not just a kind of a discussion. They have gone beyond the discussion. They have proposed a full merger, and they want to form up a new company. So it's something, gone a little bit detailed. It's not just an initial discussion. It has just gone a little bit detailed. So at this point, before proceeding any further, I think Luke has a duty to inform his board.
Okay.
And I mean, when all these discussions are happening, do you think that we should make sure that the basic agreements like non-disclosure agreements with the companies should be in place before all these discussions happening around it? Because as I agree with my fellow colleague there, because every company has their merger and acquisition committee. So before doing any decision making, they have to get it approved by that committee.
Correct.
So even if they are sniffing around with each other in the sense that they're trying to understand what is the each other's outlook on it, I don't see a huge ethical issue. That's the way M&As happens. It is all like having a chat with one-to-one basis, convincing each person one by one. But yeah, there is this issue that I don't see any non-disclosure agreements happening in place.
I think it's a good
And
thing to get into a non-disclosure, but even to get into a non-disclosure, remember, it's not between Morris and Luke, it's between AEN and SCA. So the board of directors of the two companies should get involved. You get the point, right?
yeah,
The NDC is a good thing. Non-disclosure should be signed by the board of directors. So the by Luke trying to keep it to himself and getting you involved, without telling his founder directors and all the other, is not ethical, I think. You being the advisor, you must suggest, look here, I'm just an advisor. You must take this before the board, before it proceeds further. He can decide. Luke can decide whatever he is going to do. But as a professional advisor, you must not encourage him to discuss matters with you. Because if you don't stop it here, what's going to happen is tomorrow he's going to call up again and say, hey, Luke, I discussed with Morris something more, and and then you get entangled in that one. This office matters.
Most of the times what happens is that when these transactions are happening, even the CEOs doesn't know what exactly to do and how to convince the board in the first time.
Yeah.
So they want some key people to do some research, go to Bloomberg database, try to find some precedent transaction,
right.
what happened to that.
Keep the board informed, that, and then appoint a committee. That I can be included in that one. Right? That's all right.
Okay.
But keep the board informed. I don't want the secretive things to go, because you will get it. These in offices, you have to be very careful. You might, very, very genuinely, very happily start, talking to Luke, and, you're very happy. Luke is having a lot of confidence on me. But without realizing, you have got into a big entangle. And after some time, you can't go and face Fiona. Fiona will ask, when did you start this discussion, Mahalingam? Oh, it was 3 months back. Why didn't you tell me? So we must not get into that kind of situation. We must tell Luke, look here, we must sign a non-disclosure. We must appoint a committee. I'm very willing to work in that committee, but keep the board informed. Make him on the right path. Don't try to get him on the short path, and even to make even to see that his name is somewhat disreputed. As someone said, when he has this secretive discussion, the people have a very different perception. They will say there's a secret underhand transaction happening. So make it transparent, make it open. When you are doing something honest, make it open and do it. You don't need to go to the public, but your board is your confidence. I mean, in family, we don't do things without informing our wife, isn't it? Without informing our husband. And that's the same with the board. You can't do anything without informing the board. Take it up at the board level. Any other things that you all have? I think I have fairly discussed this one, because you can see different scenarios arising from the same mock, right? I want you all to think more. I must have time to think and try to do more mocks before we have about another couple of days before we finish up our sessions. I want to do more and more. I'm really getting excited about this whole thing, and I want to do a lot on this area. So we have another lesson, I think, on Monday. Yeah. Monday, 8 o'clock? Yeah. We have a lesson on Monday, 8 o'clock. Is it all right?
We don't have anything tomorrow.
Tomorrow, I think, I'm not sure. Just a minute. I think Anju must be having. Hold on for a second.
Yeah, tomorrow also we have a class.
Yeah, tomorrow, I think, tomorrow is 30th tomorrow. 30th, tomorrow, Anju is doing that class. Actually, today it was Anju's class I did it. So tomorrow, Anju will do that class. and I will be meeting you on Monday, 8 to 9:30. Right?
Yeah.
So tomorrow you will do some work with Anju. I'm not exactly sure what she will do, but I will be meeting you on Monday, and I will look at the balance part of this month. Try to figure out your things. I'm thinking new all the time. I'm all out for. I'm open for anything. So just crack your brains, come out with a lot of things, and let's do the best for us. Yeah. So we have it on the 1st, and we have on the 3rd again. Yeah, those are the classes we have. So I will see you on Monday, but tomorrow you will have a class with Anju. Okay, thanks a lot. Any other issues? Any other problems?
Okay, thank you.
Right. Okay. If you all have time,
Thank you.
write the answer, send me. I will try to correct it and give it to you all.
Okay.
Thank you. Take care. All the best.
Bye bye.
Bye.